Hello guys, welcome back to my channel. This is the voice of FX Adventure, reaching you guys all the way from West Africa, Nigeria to be precise. I know it's been a minute I've been here, so welcome back guys. I have my reasons why I've not been active on my YouTube channel. I actually have things that engaged me, and part of it is actually trading, and yeah, so I'm back again, and in this episode, we'll be going through some back testing that I did, and also we'll be analyzing the trades that did not work out, okay, and the reasons why they did not work out. All right, and you all know that I mainly focus on forex major pairs, most especially Euro USD and British Pound USD. The current chart you guys see on the screen is Euro USD, and I'm currently on the 5 minute time frame. All right, and on the chart also you can see a couple of boxes and dotted lines. That is actually the quarter cycle theory. It's a tool that there is a tool on TradingView that I'm using for that. And for the guys that have been following my channel, they would bear me witness that quarter cycle theory is nothing new here. I've made a couple of videos about it, and also I have recommended that for some other guys that are really interested in knowing what I do and how I do it. So yeah, in order not to waste time, we'll just get into why we are here. And basically, what we'll be doing is we'll be looking at some recent trades that I actually took. Some of them are based on back testing, but majority of them is are trades that I took. Okay, so we'll be starting from Monday 30th December, which is this particular guy you see here. And but before we continue, I'm going to pretty much explain the chart, and the reason why I'm doing that is maybe for you guys that wants to tag along, in what I do, you would pretty much understand and have a clue on, what you see, what we do here, and basically that. All right. So, well, first of all, it's my analysis starts from the higher time frame, okay? But when I was actually in the course of taking trades and doing back testing, I figured out that I can actually set up my EMA to show me the exact position that the EMA is on the 1 hour time frame. I don't know if I'm explaining that better for you guys to understand, or I'm confusing you guys the more. But basically, what I'm just trying to let you guys know is if you look at this blue line here, the blue EMA line there, that blue EMA line is the same thing with the 200 EMA line on the 1 hour time frame. And why do I make reference to the EMA line? Because uh, what I use to get the bias of the trend, of the current market trend, is the EMA. All right. There are other tools you can use for that, but for me, I like using EMA because it's way simple. It's not complex. It's just straightforward. All right. And most times when you're using EMA to trade, if the market is below the 200 EMA, the market trend is considered to be bearish, whereas vice versa, if the price or the market is above the 200 EMA, the market is considered to be in a bullish trend. All right. So with that said, we've already have an idea of what we are looking for in the market, what depending on where the current position the price is at. All right. So for example, let's look at this particular trade here. This was a loser. All right. Why do I mean that this was a loser? If you look at it, you see the market did not reach the TP before it went back and stopped us out here. Okay, so our stop loss is obviously here at the top, then our TP is right there at the bottom. For the guys that are new into trading, basically the drawing that you see here is just the position position size drawing or the position drawing. All right. The green line is our profit area, the red line is our stop loss area. Period. All right. So now we have a couple of losses and a couple of wins, all right? And we'll be going through them one after the other to have an understanding why we took the trade and why the trade did not work out, all right? So first of all, you can see that price was trading below the blue line. Remember what I told you about the blue line? The blue line you see here is a 200 exponential moving average on the 1 hour time frame. Why do I see it on the 5 minute time frame? I had to do some conversions and some calculations to be able to get the exact EMA points that I will use on the 5 minute time frame to be able to show me at the exact position it is on the 1 hour time frame. I'll just do this for to give you clarifications, all right? But in order not to digress, we'll just focus on why we are here, all right? So we'll just go back to analyzing the trades that we have on the chart and why some worked out and why some did not work out, all right? So for the guys that understand quarter cycle theory, remember the first thing you look for in a quarter cycle theory is an accumulation, or maybe in the price generally, you look for an accumulation. And once there is an accumulation, the next thing is what? A manipulation. Then after the manipulation, we have an expansion. All right. Then in the expansion, we'll be expecting a continuation of that expansion. Then after, you will get a reversal. All right. So now coming to this price here and this trade that we took here. All right. So the first thing we look out for is what trend is the price currently at. The price currently at this point is bearish. It's as simple as just looking at it. You can see the price was trading below the blue line. All right, that's our blue line there. All right, below the blue line, this blue line there. All right, price was trading below the blue line, which means it was bearish. So we are looking to short the market at the time we saw it there. All right, then the next thing I do is I go to the external structures. All right, the external structure is the dashed line that you see there. All right, so here is the first accumulation. All right, if you look at this is an accumulation right there, and you see how the market manipulated down. All right, then after market manipulating down, do you see the expansion? That is quarter cycle theory for you. All right, and this is just the reason why this trade did not work out. And some will be asking, okay, if you understood this, why did you go ahead to short the market? Well, the reason why I short the market is because I was banking on the manipulation, because I know that for the fact that the market took the low out, for the fact that the market took the low of the accumulation first, it increases the possibility, let me make this a red line, it increases the chances of, or maybe red, I hope you guys can see it, maybe make it like an orange, I'll make it bolder. All right, so you see that orange line there, you see the low of the accumulation, the market came down, took it, that's the manipulation there, then the market went and reversed after that. All right, and the reason why I actually jumped on the trade at the time that I executed this trade here was that first of all, the market was in the bearish trend position. The market was trading below the 200 exponential moving average of the 1 hour, not of the 5 minutes. We are currently in the 5 minute, but this EMA you are seeing here is derived or is gotten from the 1 hour. And I know some of you that are into trading will be wondering, how am I able to see the exponential moving average position of the 1 hour on the 5 minute Well, it's as simple as doing some calculations. Okay, so I did some calculation and I got the exact value that I can use in my EMA to be able to show me the 1 hour EMA on the 5 minute time frame. And the essence of why I'm using the 1 hour time frame is because 1 hour is my higher time frame. That is where I get my bias from, and I now trade on the lower time frame in the likes of 1 minute or 5 minute time frame. I'm not here to tell you guys about how I go about the market analysis. We are just basically here to analyze the trades that we took, why some worked and why some did not work. All right. So the reason why this did not work is because markets manipulated down first. Assuming that this market manipulated up first, all right, I'm going to remove this drawing. Let's say the market manipulated up first. It increases the chances of us having a winning trade here, because it means that the market manipulated the top of the accumulation first, which means the expansion we are expecting is going to go on the downside. So that's just the reason why this trade did not work out. Let's go to the next trade that worked out. Okay, so look at this guy here. All right, now we'll go ahead. The first accumulation was here because this is the Q1 of the day. For the guys that understand quarter cycle theory, they would bear me witness that I said about this. See the manipulation. You see how the market traded up first in order to take out the high of the accumulation. All right, you see immediately the market took out the high of the accumulation here, market started reversing. And you see the point where I had the trade set. The reason why I have the trade set here is because this was the point where the internal quarter was broken. Immediately the internal quarter breaks, it means that the market has fully entered into the bearish movement. And you saw what happened after that. All right, you saw how the market traded, and usually what I look for is 1:2. 1:2 is if I'm risking $100, I am aiming to gain $200. That is 1:2. All right, so you saw how the market pretty much traded up, then expanded down. Look at that long expansion there, and grabbing the move there, beautiful. All right, same thing here. You see an accumulation here. These are the market that worked out. All right, you see the accumulation here. You saw how the market traded up first, taking out the top of the accumulation. All right, immediately the market took it out. Do you see the expansion all the way down? Once you're able to see this manipulation and you get a very good position, so like I told you guys, how I go about mine is I look for the internal structure. So the external structure is what I use in getting getting where the market wants to manipulate. Then after the manipulation, the confirmation entry for me is when the market breaks the internal quarter low of the market of the price used in trading, used in violating the top of the accumulation. I know this might be confusing now for some guys that don't understand quarter cycle theory, but pretty much the picture that I'm drawing for you guys, if you're able to understand the first step, which is understanding where the market is it below the 200 EMA of the 1 hour, or is it above the 200 EMA of the 1 hour? That will give you your bias. After that, you now come into the quarter and see what the quarter is doing. All right, and mainly you look out for the accumulation first. After an accumulation, there has to be a manipulation. Immediately after the manipulation, then you start looking for your entry. Once you get the confirmation entry, you jump in the market, and it is what it is. You trade with it. Look at how this was a winner. Like I told you guys, market manipulated first up, then expanded down. In the expansion, you get your good position, you enter, and you enjoy. This is 1:2 here. Here also is 1:2 here. I aim for 1:2. The market can trade more after that. You see here, the market even went all the way down here. Assuming you keep on holding, this is already, if you look at here, You see 9.77 inside there. That's the risk to reward ratio. You see it 9.77. That means if you're risking $100 here, you stand to make 900. All right. But like I told you guys, if you have a plan, you stick to the plan. So my own plan is, if I'm able to get 1:2, I'm okay. All right. And the reason why I go for 1:2, I will explain towards the ending of this video so that we don't digress. All right. Then coming to this guy is a loser. All right. This guy is a loser. As you guys can see, you saw this trade. We did not win this trade. So let's go over it and see what happened. Okay. So the first accumulation happened in the early hours of the day, the Q1 of the day. All right. So the Q1 of the day is here. You saw that accumulation, very tiny one right there. Immediately the accumulation, you see the market did not trade down first. What did it do? It went up first. Okay. So the market went all the way up here. The Q2 of the day manipulated. Even the Q3 of the day, the market still took it out. So there's something we call a good trade. A good trade is a trade that you are sure that all your steps or all your check boxes are ticked. All right. So the things that you're looking out for in the price action plays out, but unfortunately the market did not go your direction. It happens. So, and another thing I want to point out is, if you can avoid trading on Fridays, please do. If you can avoid it, please do, because mostly on Fridays, price action behaves funny. That is my experience, and also coming from a fan of ICT, Inner Circle Trader, I have watched most of his videos, and he always say it that if you can avoid Fridays, please do. If you can avoid Fridays, please do, because most times Fridays are used in setting up price for the next week. So that's why most times Fridays might not behave or might not give you the ideal price movement, So Fridays can behave randomly. Fridays can just do crazy things. So, and if you look at on this day, it was a Friday. If you look at the bottom part there, you'll see it was a Friday, 3rd January 2025. So this was a Friday, but I ended up trading that day. I lost, which is okay, but it is what it is. In this particular move here, the expected move is that immediately they took out the accumulation on the first quarter. What we should be expecting is a very nice, expansion on the downside, but you see the market was not able to do that and eventually stopped us out at the top there. All right. So this was a loser that we don't have control over. We couldn't do much about it. It is what it is. All right. Then we come to this next guy. All right. Look at this. I think this guy is a very bigger move. All right. This was the accumulation. All right. So immediately after the accumulation, you see how the market started trading up. The market traded up all the way to this point here. All right. I'm going to move this drawing a little bit so that we'll get space. All right. So you see how the market traded up all the way up here. I know some people will be wondering, at what point do you get the confirmation? Remember, the confirmation comes from the internal structure. So once the market is trading up, you wait for when the market breaks the low of an internal structure quarter. And the reason why I did not enter any trade here is because you can see the internal structure, none of the lows were broken. The market kept on trading all the way up until the low of the market got broken internally. The internal structure got broken here. And not only that, the market low was broken there, you see the market came down with this engulfing red candle, and the market traded back below the 200 EMA of the 1 hour. So immediately I saw this, I knew that, okay, now we had our accumulation here. Market traded up first. Now the market has already broken the internal structure low. Then not only that, it broke it, the candle also closed below the what do you call it, below the 200 EMA of the 1 hour. Immediately I saw that, that's where you have your entry. And like I said, you always aim for what? 1:2. You see the risk to reward ratio there, risk slash reward in there is what? 2. So that means if you're risking $100, you stand to make a 200%, which is $200 gain on it. All right. So when I had this position on, we left it. You left it alone. So you see, if I should drag this all the way here, this was a very big one, a very huge one. It took time, but you see where the market eventually hit the TP all the way down there. All right, it was a very big one, and I held this position for like how many days? Up to 2 to 3 days, because of the fact that the the risk range is very high, so that's it about that. Okay, so that's that. Then we come to the next guy. The next guy is here. Pretty simple. You see, that's our accumulation right there. Okay, you saw what the market did. Market traded above it. All right, immediately market traded above it. They took out the low of the internal structure. Immediately they took it out. That's my confirmation, and that's when I enter. Then you see how the market went all the way down. And again, I aim for a risk to reward of 1:2. The market can go beyond that, but once I'm able to get 1 to 2, I'm good to go. I'm good to go. All right. Then on the next guy is this particular guy here. We can go ahead to do the analysis. All right. Okay. So now here we have our accumulation here. All right. You see here the market did what? The market traded down first, which means the market manipulated down first. We are not interested jumping on the market at this point. All right. Then after the market traded up, it expanded up, but it did not expand all the way to the top of the accumulation. So the behavior here is a little bit funky. It's not clean. The price action here is not clean. If I'm being honest, it's not clean. But the reason why I jumped on this trade is because in as much as the market did all of that, you can still see that when the Q3 of the day started, the market manipulated the Q2 top again. This is the top of the Q2. Do you see it there? Let me put a line there. Yeah, you see that orange line? If I zoom in on it, do you see that wick? Do you see that small wick there? Yeah, that's it there. Immediately the small wick took it, it took out the top of it. And considering, remember, the first thing you look at is what trend the market is. The price is below the blue line. The blue line is what? The blue line is the 200 EMA of the 1 hour time frame. Okay, so that means there is more bearish pressure compared to bullish pressure, and that's one thing I look out for. Where is the pressure at? If you understand where the pressure is at, then you now use your quarter based on your accumulation, your manipulation, etc., to now determine where you will position yourself at in order to get the best moves in the market. Okay, so ideally the market manipulated down, expanded up, but wasn't a fantastic expansion, and the reason why is because there is more bearish force on the market. All right, but what did I do? I waited for the next quarter to take the high. Remember, I did not enter here. You just have to wait for the next quarter. Immediately the next quarter took the high, you wait for the internal structure to break the low. Immediately the internal structure broke the low, you put your that's where you put your position, and that's where I have this position. All right, then you saw how the market pretty much sold out all the way down here, And again, you aim for a risk to reward of 1:2. All right. Then see this particular guy here. This guy is a loser. Okay, it's a complete loser. This big guy here is a loser, and I will show you guys why it is a loser. Okay, remember what I normally tell you guys. All right, here is your accumulation, the Q1 accumulation of the day. All right, instead of market to manipulate up, it ended up manipulating down. That's the first thing that the market failed to give us. The first confirmation is the market trading below the 200 EMA? Yes, it is. That's the first. The second thing you look out for is market should manipulate up, not down. But now market went and manipulated down, so that means assuming we could leave this trade, we would have. And also considering the fact that on this day was a Friday, so me jumping on this trade is just being silly, you know. And also FOMO, because fear of missing out. I wouldn't want to be like, I was there, I should have jumped on it, and now market has went my direction, blah 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 blah. But the bottom line is, if you stick to the rule is what will save you in the market. All right, so we saw the accumulation here. Market manipulated down instead of up. Assuming market manipulated up, it will increase our chances of getting something out of it. But instead of that, market manipulated down, expanded up. Now, after the expansion up, the next thing we can do if we really, really wanted to, take a trade is we would have waited for markets to take out the high of the Q2 of the day. The high of the Q2 of the day, which is at that level. And the market did not take it out. What did market do? Market only came close to it, but did not take the liquidity. You see the market there? You see the market there? It came close to it, but it did not go above it. All right. So with that said, the market pretty much went down. So if I'm to say anything here, I would say that the market pretty much just went down without taking the top liquidity. It just went down without taking the top liquidity. What would have been nice if to see market take up, immediately if market swipes up, it increases the possibility or the chances of us having a winner. All right. So with that big guy there, if we should move this guy all the way to the left, you see where the market stopped us out. That is here. All right. This is where the market stopped us out. And if you're paying attention to all the things I'm saying, you would pretty much have a clue on why we had the losers and why we had the winners. The reason why the winners was a winner and why the losses were losses, if you paid attention to all the things I'm saying. But at the end of the video, we will still have a summary of that. All right. So this guy ended up being a loser. All right. Then we come to the next guy. This guy is also a loser. Now let's see why we lost to this guy. The Q1 of the day. This is the Q1 of the day. All right. This is the Q1 of the day. If the market traded up first, it would have given us a very good chances of having a winner. But what did the market do? The market traded down first. You see where the market started trading down. From there, the market traded down first, taking the low of the accumulation. This is the low of the accumulation. You see how the market took the low of the accumulation. Then immediately the market took the low of the accumulation. The market ended up expanding up. It was a pretty slow day, but it was still what it is. You see, market trading down first, then expanded up. And that was why this was a loser. And I know, again, people will be asking, so if you know all this thing, why did you not do it that way? I am only trading in the direction of the trend. I'm a trend trader. I'm a swing trend trader. I like following the trend. I don't like trading against the trend. All right. So that's why you will see me, taking trades that are always in the direction of the trend. But one thing I I also picked out from these past trades that I'm currently discussing with you guys is that if you have the trend and you have the quarter cycle theory playing in favor of that trend that you want to go, it increases your chances. It increases your chances. Okay. Whereas when it does the opposite, it reduces your chances. It doesn't mean that you can't get a winner whenever things go that way, but it drastically reduces your chances of having a good trade. So that was why this guy was a loser. This guy was a loser because the market manipulated down first. The best thing we would have wanted to see is the market manipulate up first before coming down. All right. This guy also here, a loser, pretty much very simple. Here is the Q1 of the day. All right. Here is the Q2 of the day. And both of them are just accumulations. And I know you guys should know what accumulation is. If you don't know what it is, then you should watch some of all my previous videos. I think I explained that in my videos. All right. So you see the market, instead of manipulating up, it came down first. That's just the reason why we had those losers. If you pay attention, all of our losers was just the fact that market came down first. Assuming the market manipulated up first, it will increase our chances of having a win. All right. So you see that this loser here, market manipulated down first, then expanded up. Same thing today, because I also took a trade today and I feel bad that I took it because I should have learned from my past mistakes. But I'm just a human. I will keep on learning every day. All right. So you see, the market did what? Manipulated down first. This is the low of the Q1. At the time I'm making this video, this is live market. So it's not like I'm not here to bubble you guys. All right. So this was the low of the accumulation of the first quarter. You see how the market came down first, took the low, then expanded after that. So those are the reasons why we lost those trades. All right. Now, if we go over it again one more time, this guy was a loser because of what? Market manipulated down first. Then we got stopped out when the market was expanding up. All right. This guy was a winner. This guy was a winner because market manipulated up first. You see the top, that's the top of the first accumulation of the day. That's the top there. So the market came up first, then increased chances of us having a win. Immediately you have a good entry. You see how the market traded down beautifully. Why this guy is a winner? The same thing. That's your accumulation there. Market traded up first, manipulated up, then came down. See, trust me, it's as simple as that. It's as simple as that. Quarter cycle theory is as simple as that. All right. You see the accumulation here. Market manipulated up first. When we got the confirmation, we entered, but quite unfortunately, this guy wasn't a winner. And I gave the reasons why this guy wasn't a winner. You can get everything right and still lose. And that's, we call it good trade. A good trade is when you got everything right, but market just did not play in your favor. You wouldn't call that a bad trade. It's still a good trade. All right. So this guy manipulated up first, but when markets wanted to expand down, we did not get the complete expansion. And I gave the reason why, because this was a Friday. During Fridays, if you can avoid trading on Fridays, please do so, because Friday price action can be messy. It can be, really, really funky. I don't know, lack of better words. All right. So this guy was a very big one, but it's still a winner. All right. You see what the market did? That's our accumulation. The market traded up first. That was a very long expansion before giving us the confirmation, but immediately we got the confirmation, you see how the market pretty much started going down. All right. You will get the clearer picture if I zoom out, because that's a big one. And if I should drag this all the way to the left, you will see the market did not stop us out. Initially, the market came all the way here, almost stopped us out, but eventually reversed and started going to our TP all the way down there. All right. So that's one is good. You see another accumulation here. Immediately market manipulated up. On the expansion down, we got our entry. We got a very nice move there. Same thing here. Okay, here is quite different, because the Q1 market manipulated down instead of up. But the good thing about this guy is that eventually, immediately the market took out the high of the Q2. All right. So we'll consider this to be a manipulation on the Q2, because the market traded up first, took out the high of the Q2, we got the confirmation, then we entered. Although this was a winner, but like I said, assuming I am being very careful, I wouldn't have taken this trade, but it was a winner anyway. All right. So yeah, coming to this guy here, this guy was a loser. Why? The first move here, market manipulated down, expanded up, which is good. All right. It's just like similar to this guy here. Very similar to this guy here. All right. Similar to this previous market here. Market manipulated down. All right. Then came up. Then on the third quarter of the day, you see market traded up and took the high of the Q2. Whereas in this one, market traded down, expanded up. Instead of us to wait for market to take the high of the Q2, the market only came close to it, did not take it out. The Q2 of the day is the red dashed line, or the red dashed line. The Q3 of the day is the green dashed line. You see that the green dashed line at the top did not take out the red dashed line at the top, compared to this one here, that you can see that the market moved up a little bit. So that's the reason why this guy was a loser. All right. Same thing with this guy here. All right. You see the Q1 of the day, market manipulated down first. That reduced our chances of having a winner, and etc. etc. And that's how even this guy was also a loser. You see the accumulation there, market manipulated down first, then went up. Same thing with here, market manipulated down first, then went up. So that's the reason why we have those losses. So that means if we learn from our mistakes, it means that next time, if a market manipulates down, assuming we want to short a market and we saw an accumulation and the market manipulates down, we will leave it alone. We will just leave it alone. We'll wait for another good trade. But if the market manipulates up, it increases our chances and we'll look for an entry. So that is it about that. And that's the reason why we had the losses we have, and the reason why we had the winners that we had. Then the question now is, why am I going for 1:2? All right. So let's do the calculation. 1:2. All right. So let's assume we are risking $100. All right. If your risk to reward ratio is 1:2, it means if I'm risking $100, I stand to make 200. So now let's do a simple mathematics. All right. This was a loser. So that means here is minus 100. So that means we are in loss. All right. Minus 100 here. Here is a winner, which means we are making 200. 200 plus minus 100 will give us 100. So here we are in $100 profit. All right. Here is 1:2. So that means we are making 200 from here. If you add 200 to the 100 that is remaining from here, it's $300. All right. We come here again. This was a loser. All right. Remember, if we are losing 100 because that's what we are risking. Okay. Here is a loser. So that means if you minus 100 from our 300, we have 200 left. All right. Here, this big guy was a winner. Remember, this big guy here is a winner. That is 200. 200 plus the balance 200 that we have, that's $400. All right. Then this guy also here is a winner. All right. So this guy being a winner is $200. $200 plus the $400 we had is $600. So now we have $600 of profit. This guy also is a winner. All right. So that is 200. 200 plus the 600 is 800. Now we have 800 in our balance. Okay. This guy was a loser, which is 100. You minus 100 from our 800, we have 700 left. This guy is a loser. We minus 100 from the 700, we have $600 left. This guy also is a loser. If you minus the 100 from this loss from the 600, we have 500. This guy is also a loser. If you minus another 100, we have 400 left. So that means in the course of, how many trades? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. In the course of 11 trades, we are in profit. We have $400 profit, in as much as we had how many losses? We had 1, 2, 3, 4, 5. In as much as we had 5 losses. So that's why I'm aiming for 1:2. You can aim for 1:3, but I like 1:2. If I'm able to get 1:2, it's okay by me. So yeah, this is it for me, guys. I think the video is getting long, so I'm going to stop the video right here. And so this is just me going over the past trade that I took, and showing you guys some insights also, and also the lessons that I learned from it. And it's very, very important that you keep journals of your trade, and do sections like this. It helps you to understand your trade better and understand your strategy better. So just doing this already, I can see areas that I can improve. I can see things that I can avoid, and I also see things that is consistent with the market that I can leverage on to be able to be more profitable. All right. So I'll be making more videos like this. I kept on making, or I will keep on making more videos like this. And I hope you guys do enjoy it. If you know someone that wants to learn how to trade, you can share the video with them. If you yourself want to learn how to trade, you can subscribe to my channel, turn on the notification bell so that you can get notification whenever I upload videos. And yeah, that's it, guys. I hope you guys do have a wonderful day. I'll keep on making more videos and more content like this, so stay tuned, don't go nowhere. And yeah, like I said, I am trying to build up a community here, so that when we have a much more bigger community, we might we will surely start doing live streaming section for you guys to also tag along and see me do this live, so that it won't be like I'm just here selling dreams to you guys. All right, hope you guys do have a wonderful day. I have to bounce out right about now. It's still FX Adventure. Regardless, take care of yourself and be safe out there. Namaste.